future of payments, stable coins, question mark. So please put your hands together for Rayn Derksen, Head of Blockchain and Special Projects at Nedbank. Then Badi Sudhakaran, who's the co-founder and chief product officer at Valor.com.
Rikki's here. No.
Is he here?
Yeah.
I appreciate it, Rikki. Very happy that you've joined us. Thank you very much. So Rikki Barnes, Head of Crypto and DLT Center of Expertise at First National Bank. I won't tell anybody I bank with FNB, but so don't worry. I do. I won't tell you. Rayn might have something to say about that. And then someone who's going to be very proud of me because I get her name right. Adele Jones, who is the lead architect, information security and blockchain at Nedbank, and she fits that on a business card. That is so cool. All right, wonderful. And then the co-founder at Block Markets Africa, BMA, Tobie van der Spuy. I'm going to hand over to you guys now. Have fun.
Hi everyone, I'm excited to be here. Congratulations, you've made it to the final panel. You can drink after this. Most of you have already started. I'm Rayn Derksen. I head up the blockchain and Web3 transformation within retail and business banking in Nedbank. So I'm going to introduce you. Actually, they'll introduce themselves because they've also had some stuff to drink. We'll start with Rikki. Rikki from FNB, Rand Merchant, sorry.
Okay, just checking. Yep, seems to be working. My name is Rikki Barnes, heading up crypto and blockchain enabler for First Rand. Been in traditional finance for about 20 years. In the last 2 or so, I've been in this blockchain space, so trying to bridge between the two, having fun.
Thanks, Rikki. Badi?
Hi, my name is Badi Sudhakaran. I'm the co-founder and chief product officer of Valor.com, VALR.com. We're one of the, we are the biggest crypto exchange headquartered in Africa. We serve over 330,000 customers worldwide, and we recently raised about $50 million in a Series B funding that we are using to expand our product offerings, launch into new markets, and expand our team of passionate people trying to fulfill our vision of creating a financial system that recognizes the oneness of humanity. So it's great to be here. Thanks.
Thank you, Badi. Adele?
Hi, my name is Adele Jones. I'm the lead cybersecurity and blockchain architect at Nedbank. I've been actively involved in the cybersecurity community for over 15 years now. And it's my love for cryptography and good maths, proper maths, that brought me into the blockchain and crypto world. So I really love this ecosystem.
Tobie?
My name is Tobie van der Spuy, co-founder at Block Markets Africa. We're a Web3 advisory and product partner to central banks, commercial banks, and the general financial service provider industry. And much like our bigger brother fans at Valor, we also really want to push forward the adoption of Web3 technology and infrastructure across the planet.
Perfect. So let me just get into T's and C's. I do just want to express that the views and opinions on this panel is that of the individuals and not their organizations. That being said, let's set the scene. We've had some comments around to say how stable is stable coins and, you know, the Terra Luna crash. So just for this panel and the conversation of using stable coins as a payment method, we're going to talk about fiat or reserve-backed stable coins as a medium of an exchange. So I'm going to narrow it down to that. And Badi, I'm going to go to you first. Let's just do a one-liner. What's the difference between a stable coin and crypto?
Well, stablecoin is basically a one-to-one representation of existing fiat currencies like the Rand or US dollars. And stablecoins are tokens issued onto the blockchain by privately held companies that may or may not be regulated. And these stablecoins, like you said, are usually backed by some form of reserves. Each and every stablecoin that's out there has their own unique design of the way they design their reserve assets.
And let's talk about the reserves, because I think that's an important part, especially if we're looking at it in terms of a new payment or a new form of payment. So when we're saying backed by reserves, what is the importance? How does it work? Maybe just some examples.
Yeah. Well, it's very, very important to understand, for consumers to understand and do their own research as to the design of the reserve assets. Like you mentioned Luna crash, for example. That particular scenario where was the so-called stablecoin in the Terra ecosystem, which was UST, was actually backed by investment tokens called Luna. And the stability of that particular stablecoin was actually dependent on the future success of the stablecoin. So it kind of created this circular relationship which happened to be played out this way, where the reserve assets started losing value, and then the stablecoin started losing its peg with the US dollar, and then really created a death spiral over there. So, I mean, stablecoins, if implemented by entities that are responsible and trustworthy, can actually positively influence financial functions, both for centralized and decentralized applications, like faster transactions and real-time transactions, cross-border, more efficient cross-border transactions, and so on and so forth. But I just wanted to mention one thing, because stablecoins are actually representing, like I said, fiat currency. So nothing really changes in terms of the underlying fundamentals of the fiat currencies. And there was a recent examination of about 775 fiat currencies, and the study showed that 20% of them failed due to hyperinflation, 21% failed due to war, and the study literally concluded that the lifespan of fiat currency is only about 35 years. So while in the short term, stable coins are great for efficiency gains and so on and so forth, we also have to have a view of what this stable coin means, and the stable coins that we understand today might be the most unstable coins of the future.
Yeah, okay. And let's talk about the stability of it, and some of the key technologies, and Adele, I'm going to bring you in here, is smart contracts. The idea of programmable money, writing security into the code, and I know you are very buff-in when it comes to cybersecurity. So what does that mean for the industry? From a cybersecurity perspective, smart contracts, how does that change the industry?
So Rayn, maybe just smart contracts, for those of you who don't know, that is technically what is the technology underpinning stablecoins. And it's basically Turing-complete logic that you can apply to movement of value. So now I can put logic in a code artifact, and I can bind that logic with the movement of money. Now, the panacea in cybersecurity, or what we try to achieve in cybersecurity, is preventive fraud. We want to prevent fraud before it even happens. At the moment, that's a nearly impossible goal, and we're rather reactive.
Yeah.
With smart contracts, we can now codify and put logic and tie that logic with the movement of the asset or the value, and we can then verify before execution, before the value is moved to a different location, we can verify certain rules. So for example, let's say we've identified money mule accounts, because we identify them today, but we check it after the transactions happen. I can now, in the smart contract, code the list of money mule accounts, and the money won't move. So it's preventive fraud.
Yeah.
So I'm very excited about this. And it builds from a security perspective. Remember, this technology builds on years and years of research of cryptography. So those of you who don't know, one of the cryptography inventions that's part of blockchain is the Merkle tree. I'm not going to go into the details, but it's beautiful. And finally, this is a technology that brings so much cryptographic innovations together, and they're working together to achieve a new outcome. And I'm going to end up here, but with quantum computing, we can start combining quantum computing, where you use quantum encryption techniques and combining this with this technology. It's very exciting.
So,
I really think it's going to bring us to the next level.
So this is phenomenal, and I'm going to ask you a straightforward question, because I know we can talk for hours on this. Is stablecoins a safe method for payment?
So my answer is going to be yes, but I'm going to put a condition on it. If it's coded correctly and that code is correctly verified, because I have seen some terrible smart contracts where you should just fire that coder because it was terribly written. But if it's well-written code, then absolutely.
So yes, but not for rookie coders.
Absolutely.
Okay.
Don't put your junior coder on it.
Okay, perfect. And I think let's touch on some of really the hot topics and the use cases happening in the industry is cross-border remittance. Rikki, this is your expertise. So let's talk a little bit about how the role that stablecoins can play in cross-border remittance.
Sure, I think stablecoins often mooted as a solution, or crypto often mooted as a solution for cross-border payments, and I think there are pros and cons. I mean, from a table stakes perspective, it's always faster, cheaper, easier. I think some of that may not play out in reality. When we talk about costs and stablecoins in particular, you're going to clip the transaction on both sides into a stablecoin. If there's low liquidity, you're going to pay much more than you might by going through traditional FX channels. When we talk about speed, some of that speed is warranted. Some of the speed is is based on regulatory arbitrage, which is not a sustainable solution in the longer term. Ease, arguable. I think good CX and UX coming into play will make this a better space than it was before. But yeah, I think it's a balanced discussion that needs to be had. And I think that stablecoins can exploit a gap that maybe CBDCs aren't ready to just yet.
Yeah.
So CBDC is a fantastic idea. I think it's going to take a while for governments to roll them out. And CBDCs, for the most part, are sovereign constructs. So when you start going cross-border, you need harmonization of rules, you need standards, you need interoperability. So it takes a long time to achieve those sorts of goals, and private stablecoins can step into the gap in the meanwhile. But again, harmonization, speed, cost, those need to be considered. Also, regulators are weighing in, really starting to assert themselves and saying things like same risk, same standards. So if a stable coin is to be regarded as currency, it needs to be treated as a currency and subject to the same measures. We'll see how regulations evolve over time and be more accommodative of newer constructs and newer rules. I don't think we can be mired in the way things were done in the past. So we'll see. I think an evolving space and definitely some opportunity, but going to be measured.
Thanks, Rikki. And I think let's touch on some of the conversations that's been having, you know, like high transaction fees, and we're talking about stable coins and their use cases in the DeFi market. Let's bring in a human aspect. I mean, we agree the cost of sending money home is too high. So if we look at other use cases more in the socioeconomic space, I mean, Tobie, we've had conversations about this a couple of times. Maybe we can just discuss some of those ideas that we had that stablecoins could solve for.
Well, the biggest thing when you want to get people to adopt Web3 is that they need to be able to pay in Web3. And if you're going to take a population that's used to their local fiat currency and say to them, hey, you now need to go and buy a crypto like Ethereum or Bitcoin or whatever and move into that value system in order to participate, then that's like creating a barrier of entry to a massive amount of the market. So if you truly want to create market adoption, then what you're going to have to start understanding, you need to be able to offer Web3 payments in a fiat currency. And that's what a stablecoin does. So the benefit then is that you can participate in decentralized autonomous organization structures. So take ideas like our stockfiles or SACCOs across Africa that you can participate in through Web3 structures. But because you are able to access that in a currency you understand and comfortable with, you're actually able to engage in that. And in other ways, we're seeing fantastic things in terms of local art and content created and industries developing for small merchants and small artists and content creators and NFTs as an example, which has been the topic of discussion today. But again, the barrier is having to go first into Ethereum or Bitcoin before I can access the NFT or access the art or the digital content or a pass or whatever it might be. That's again that barrier that we've just referred to. So the ability to be able to transact easily in and out of my fiat in a currency that I'm familiar with and comfortable with means that it's easier for me to adopt. And the human stories becomes interesting because I can now transition into the space. And yes, like Rikki mentioned, cross-border transactions are amazing and they're instant. And like Adele mentioned, you can codify and proactively implement regulatory enforcement and those things. But the benefit is that it's something that you can just use. It's just money. And that's the beauty, because the moment that you get to Web3-based currency that is just money and just value exchange, and I don't have to learn and I don't have to adapt my mental model into things, I can just participate, that's where I get to start changing lives. And I think this is the real benefit that we're seeing with stablecoins. The beauty of regulated Web3 stablecoins is actually creating access and bringing access to all this lovely stuff that most of the people at this conference already have adopted, right? But your grandmother can't do it. Your aunt struggles with it. Your uncle doesn't understand what you keep on talking about at Christmas dinner. And regulated stablecoins is literally one of the most important aspects that's utilized in order to help those people access all this fantastic stuff that we talk about and the Kool-Aid that we've drunk.
Thanks, Tobie. And actually, I want to stay on the regulation piece, because I think it's a huge pillar that we're going to have to move, or milestone we're going to have to get to see that kind of adoption. And I know everybody on the panel works very closely with the regulators. So if we can, I actually would like to see commentary from each of you as to say, you know, where, Rikki is already like, T's and C's, remember the T's and C's. But yeah, let's talk about the regulation, where that is in the space. I'm going to pick on Rikki first.
So I'd first like to commend the South African regulators. I think very open-minded, open to experimentation. I think we kind of unilaterally judge them by the amount of regulation that has been promulgated, and I don't think that does them a service in terms of the amount of effort, openness, willingness to engage that exists. If I were to speak more broadly about regulation internationally, and there are two groups that I would tap into here. British regulators, quite progressive. Again, this whole same risk, same standard topic. And they've maintained that they want to preserve customer access to innovation, to higher yields, to faster settlements, and bring in the protections. So is there depositor protection that they can introduce? Can they give PSPs, fintechs, crypto service providers access to national payment systems? So I think, again, quite measured, and I think it will prove value in the longer term. I think the American regulators, starting to cotton on, have come on big time. So if you look at the Loomis-Gillibrand Act, Responsible Financial Investment Innovations Act, they're cleaning stuff up. So who will have jurisdiction when? You know, is it SEC, CFTC, etc.? But they're putting America first. They're recognizing the value of this technology and saying the US needs to be at the forefront. We want to keep innovation in-house and dominate. We don't want to offshore companies to foreign jurisdictions. They're also saying that they want to maintain dollar hegemony, which is a very, very interesting topic. So they split stablecoins into two. They say stablecoins backed by US dollars are ones that are considered payment stablecoins. And all the balance, irrespective of whether it's algorithmically backed or backed by a non-USD fiat currency, those are considered virtual currencies. So I'll leave you with that. US first. Watch out, guys.
I don't need the mic. Thanks, Rikki. Badi, okay, yeah. let's go to you on regulation.
Yeah, regulators currently have three options. They could look at how things are playing out, let the present trends continue. That's one option. The second option is they ban the stablecoin ecosystem or any other crypto-related ecosystem in the name of financial stability. And lastly, I think that which is probably the most prudent way to go forward is to take an active role and create a balanced kind of regulation so that they can manage risks, but at least allow responsible innovation. Like when it comes to just stablecoin regulations, it would be great to get some guidelines from the regulators working with the industry to figure out what kind of assets can be used to use in the backup reserves, How often do these need to get audited? What happens in times of a bank run for that particular stable coin, and things like that. So without the clarity from the regulators and actually oversight with the stablecoin providers, it'll turn out to be a wild west where every Tom, Dick, and Harry will start issuing stablecoins that may or may not withstand the test of time. So the regulations are very, very welcome. Regulators need to think about how to take an active role in figuring things out so that innovation can occur.
Thank you, Badi. And Tobie, you've engaged a lot with the regulators, and would you say they are taking a proactive approach?
I definitely think so. Let's just be honest, it took the regulators a few years to catch on to this industry that we've been in. Since 2017, it's become a lot more interesting. But also, interestingly, around May, with the UST issues, I think it was a bombshell. And regulators around the world really took a serious look at cryptocurrency, but specifically also stablecoins. And what's come about is, I think what we're seeing is there's the acceptance that there'll be multiple forms of stablecoins and that they will have different forms of regulations. From a regulatory reserve management perspective, the ideas of reserve ratios and liquidity recovery ratios applicable for stablecoins that are issued by licensed institutions, I think is actually quite clear. It's very similar to how they manage their current balance sheet liability, right? How you have money at a bank and you see a positive balance, there's a reserve ratio and a liquidity coverage ratio requirement based on the Basel Act that has to be enforced. And again, in your local regulatory regime, your central bank will set specific additional controls for that. So the mechanisms are there to actually regulate stablecoins. And the thing that is happening now that is so exciting is that some of these regulators are now starting to be able to map the existing model to the new model. And this means that they have the tools and the regulatory structures to enforce and understand and regulate this new industry. And that leads to adoption. I just want to note, commercial banks weren't always managed by central banks. Central banks and regulations brought stability. The paper that I had issued by a specific commercial bank wasn't necessarily stable. Yeah. And that meant that it was hard for me to build a business around that because I didn't know if I could exchange it for value later. But it was regulations that gave me that confidence. We're seeing something like this happening now in crypto. Regulators are starting to engage in this space. And for the man in the street, it means that the token they have today will have predictable value tomorrow in the form of a regulated stablecoin. And that gives us a foundation to build true economic value and build real innovation and actually grow the ecosystem in a way that's sustainable and meaningful. So I think the regulators are very proactive now. I don't think they necessarily were previously, maybe even 18 months ago, and I think that they'd admit to that. Yeah. But we have to accept that everyone can change. And the things that we're seeing is a really positive and proactive engagement from regulators, not just in South Africa. And like Rikki, I want to really, really note, we are very privileged to have the regulator that we do in South Africa. There's things that we can do here that you can't do in other markets because the regulator is not accessible, not proactive, not willing to have engagements and robust discussions about these things. So for those who want to innovate, the regulator actually is open to be engaged. And I think this is a unique opportunity for the greatest innovators around us today to reach out and to engage in a way and find out how you can contribute.
Thank you, Tobie. And Adele, I know you've also dealt a lot with the regulators. You've built up good relationships with them and the industry players. You know, let's go on the notion on the tips that Tobie just went to innovators in this space. You know, reach out to the regulators, have a conversation with them. Is there anything else that you could actually just share with the community, whether it comes to regulation, whether it becomes cybersecurity, just something that where they can get a takeaway from this?
So I agree with Tobie. The South African regulatory bodies are quite open to engagement. They've established the IFWG, the Intergovernmental Financial Working Group, and you can approach them and they've got a sandbox that you can engage. Yeah. And what I like about the sandbox, they bring a lot of views together in the sandbox that you can engage with, from legal right through to some technical insights. And you can then work with them to understand your innovation, how your innovation can effectively integrate in the South African financial ecosystem, you know, and how you can offer services. So I think the local regulatory bodies are quite proactive, and they set up structures that you can engage very easily to engage other like-minded people in the ecosystem to work out your use case and to explore and mature that use case in the ecosystem.
Thank you. And so I think we've touched on a lot of topics. We are running out of time, but I just wanted to summarize. I think stablecoins is the future of payment. I don't know if there's a clear answer. Are we there yet now? From the discussions, probably not. Are we working our way towards that? It sounds like it. You know, we've touched on pillars like the security aspect, the regulation aspect, the different kinds of use cases, the adoption, some smart contract pieces, some of the reserves, the importance of it. And I suppose closing arguments or closing statements, is there anything that you guys want to just add before we close off this panel? Anyone?
Sure, I can go first. So, like everybody mentioned, stablecoins do have a positive impact on the financial functions because it creates a stable monetary unit that people are used to using on a day-to-day basis. So it really can drive adoption. In the short term, short to medium term, stablecoins will create these positive impacts. But what I do want to highlight is that amongst all the stablecoins that are available in the market, 90% of them are dollar denominated. Yeah. So I still am not sure of why a stablecoin for ZAR would be adopted by people who want to get out of ZAR. It is an important aspect to consider and see what the impact of creating a ZAR-based stablecoin would be on the market. Yeah.
I'm going to go to Tobie there, because I think we've had these discussions, and you say, you know, what is the basis of a ZAR stablecoin? But at the end of the day, you know, we do need to protect our currency and our economy. So, Tobie, I'm going to actually hand over closing statements, though.
Very simply, I think a ZAR stablecoin would enable adoption of innovation of Web3 in our market. And I think that there's probably 100 times larger audience that is interested in a ZAR stablecoin in South Africa than there is necessarily in the investment capacity of crypto. And ZAR stablecoins allow the adoption of Web3 services, not just from investment, but for payments and to build mutual funds and to build collective investment structures and to be able to build roommate agreements that execute automatically. And it just becomes part of daily life. So I differ with Badi there a little bit. I think ZAR stablecoins is probably the year 2023 is the year of the ZAR stablecoin. I hope I'm right, but I'm very, very positive about ZAR stablecoins in South Africa.
Okay, I do see we're out of time. Rikki, do you want to add any closing notes?
Yeah, maybe just a few things. So I think there's regs that need to land and be ingested by the industry, but I think there's promise. I think the thing about crypto is it's never done, right? There may be problems today, but we're still building. And I do see a bright future, whether it's stablecoins, whether it's crypto as a neutral bridging asset, which is the Ripple model, whether it's tokenized central bank money. I think it's all going to loom large. The bottom line is that crypto-based tokens offer composability, programmability that you don't get in the fiat spectrum. So I think it's here to stay. Yeah. Whether it's stablecoins, I don't know, but it'll be some crypto form.
Agreed, I like that. It's never done. Adele?
So what I want to add is everything evolve over time. I mean, we've proven this in all aspects of life. And for me, stablecoins is an evolution of money. And that's why I think even the Rand needs to evolve. Yeah. It needs to evolve. So most of you that have banking apps today, that account value that's represented in your banking app is a value on a database. Yeah. You know, and we need to evolve from that technology representation of the value to the next. So I do see a value for a Rand-based stablecoin or stablecoins, because I think there's going to be more than one version in category. And it gives us that next evolution of the Rand, you know, and allows the Rand to be on a playing field from a technology perspective with other currencies in the world.
And it's so true. And I'm going to close off with saying, it could be one form of payment. It is not going to be the only form of payment. I mean, you know, South Africa is very cash heavy. We're not getting rid of cash anytime soon. So I think, you know, the excitement is that it could potentially be there one day, hopefully soon. It could be there and it could have major benefits. And it could really, really transform many industries. Thank you, guys.
Thanks, Rayn, for hosting.
Here we go. Let's hear it for the panel. Thank you very much,
Thanks,
guys.
guys.
Very interesting indeed.